That's the truth behind becoming a millionaire. It is a linear money printing machine. What would you say is more secretive to you, your family members or your money? Not everyone should hire a financial advisor.
Dan Ebert, welcome into Forever Forward.
Thank you for having me, man. I am ecstatic to be here. I think this is one of those great examples of something that could have died on a Tuesday night at 6 p.m. after work, and you decided to make it happen. You know, how many people talk about starting a podcast but never actually follow through? And here we are. We've got the mics, we've got the HD cam, and it's really cool to see you executing so well on this.
Thanks very much, man. It's been a ride for sure, but I'm happy to have you on. And I think a great place to start is your career. We're going to talk about that a lot tonight. And you're a financial advisor. Some people listening may know what that is. Some people listening, maybe a lot of people listening, don't know what that is. So could we just start on the basics? What is a financial advisor and what does one actually do?
Yeah. So I'll start with what it is and what we do, and then I'll kind of delve into what we don't do, because I think there are a lot of misconceptions there. So really my job and the way I think of it as a financial advisor is kind of twofold. It's to deliver successful outcomes to the families and individuals and businesses I work with. And it's to give them that sense of peace and security and serenity with their finances, where they know they have that kind of silent guardian over their portfolio, their taxes, their accounts, all that good stuff. That's really what we do. And a lot of times people see financial advisors on TV and they think they're insurance salesmen or stock pickers or anything like that. We can offer you insurance. We can help you pick stocks. We can look at what makes sense for your portfolio, but it is by no means me sitting in front of a computer screen and saying, buy NVIDIA, earnings just hit, all that good stuff.
It feels like it's actually way more than that.
It is so much beyond that, because I'm not concerned with how your portfolio does next month. I'm concerned with it over the next 120 months, right? So it's really thinking about those long-term impacts on the economy and how that's going to impact your personal financial plan at the end of the day, right? It's delivering that successful outcome. It's not, I did 10% every year. No one's bragging about that at the barbecue. They're bragging at the barbecue from their second house because we got them that 10% a year and they were able to afford a vacation home.
No, that's very cool. And I think one thing that people underestimate is the peace of mind that you get when you have a good financial advisor. So can you talk a little bit about not just trying to generate returns, but actually trying to ensure that clients have a sound financial plan, and maybe what a sound financial plan actually looks like?
That's a great question. So I think a sound financial plan, first and foremost, is always the one that you understand. If you don't understand how you're invested, if you don't really understand what your accounts are doing, very hard to be set up for success. The next element is just organization. I'm so much more concerned with someone having less accounts, but knowing where everything is and understanding everything, like I said, than having 100 accounts in 100 different places. That also makes my job a lot easier, right? If I'm scrolling through Mike Sermonaro's client profile and I look at 3 accounts, I know what each one's doing.
There's less to track.
Exactly.
And in essence, it's easier to, I assume, run analytics on, organize, make decisions based off of.
Exactly. We know how a fund manager's doing. We know which clients are working with them, and if they're underperforming and we need to fire them, or if someone's doing really well and we should think about increasing our exposure there.
I think one thing that people might get wrong is when I think of financial advisors, I find myself thinking of maybe elderly people that need that in retirement. But I understand through conversations with you that everybody could use a financial advisor. Could you talk about the benefits of having an advisor, not just for somebody that's looking to retire soon, but somebody that might even just be starting to save some money?
Yeah, absolutely. So I think having a financial advisor entering and being in retirement is really paramount. I think we can all agree on that. Everyone puts money in their 401k and collects Social Security, but what's the order of operations there? Where are you pulling from accounts from which time frame? How are you generating that income stream that was so reliable and hit every 2 Fridays? So I think that's paramount. But where we're finding ourselves actually adding the most value is by setting themselves up for success before they ever got close to retirement.
Years in advance.
When you're making those right decisions early on in what we call the accumulation phase, that's where you can really set yourself up for success. And that's where you don't find yourself having to play catch up with returns and crazy tax strategies. You're doing the right things early on. The compounding really does the work for you, which is cool to watch.
That is cool. And I'm sort of familiar with the idea of compounding, but for those that don't understand, could you just explain what compounding is and why it's so important to start saving, even if it's just a little bit every month when you're in, let's say, your 20s?
Yeah, absolutely. So compounding interest, as Einstein says, right, is the eighth wonder of the world.
I've heard that.
And so if you think about it this way, if you have a linear return, right, if you're doing 10% a year, what's 10% of 100,000?
10,000.
What's 10% of 110,000?
11,000.
right? And you can see how that, even if you're not increasing your returns each and every year, that number becomes exponentially higher. Probably the best way to illustrate this is in a moderate return environment. If you're earning about 7%, your money doubles every 10 years.
Cool.
So that 100,000 becomes 200,000, that 200 becomes 400, so on and so forth. That's how that's the truth behind becoming a millionaire, is putting enough away early. If you have 100K set away that you won't touch again for a certain amount of time by a certain date, it is impossible for you not to become a millionaire. That's the secret. No one wants to get rich slowly, right? Everyone wants to get rich quick.
Right. But I feel like with compound interest, you get rich slowly at first, and then you get richer the longer it's in the market. And that's difficult because that takes a degree of discipline when you're young, to not spend your whole paycheck, to save $100 a month, whatever you can do, but you'll really see those benefits pay off in the long run.
Absolutely. And I think that's a perfect parlay into what I call reverse budgeting.
Okay.
So you talked about, here's what I spend, and then whatever that $100 left is what I save. Let's flip the script a little bit. Let's target a savings number for the month and then build your expenses around that. When you do that, it becomes a lot easier not to spend money, because let's take the $100, for example, right? If my expenses I know are going to be $4,000 a month, right? Like your video, and I know I need to save $100 a month.
Yep.
I get to that 100 number, and I want to order Uber Eats, or I want to buy another tub of pre-workout in my case, right?
Yep.
But I know I have to make my coffee at home for the rest of the month, because I know I'm going to eat into that savings. Easiest way to do that, do it early in the month, get it out of the way, transfer it into a separate investment or savings account. And now you've taken care of that. And talk about financial security. You can, sleep well at night knowing you're doing your part.
I think one thing, at least from my own group of friends, that's interesting is that I have a lot of very, very smart friends that aren't in finance.
Mm-hmm.
They don't know how the markets work. They're intimidating, they're scared, and they see it go up and go down. And I can understand how somebody would be like, look, I'm just not touching that stuff because it's too scary for me. Why should people not be afraid of financial markets? And then honestly, maybe what are some reasons why maybe they should, or at least proceed with caution?
Yeah. So let's start with why they should be afraid, right? It's the news. Turn on the news every day and you'll find a reason to be afraid.
In everything, not just markets.
Correct. There are some terrifying statistics about periods of history in the US stock market, right? As recently as 2008, top to bottom, the S&P was down 50%. If all your money was in this diversified basket, or so you thought, of 500 stocks, and you had $1 million in a very short time frame, all of a sudden you look at your account and you have 500,000. Do you think that's bad? The NASDAQ during the tech bubble was down 90%. So if you had $1 million, all of a sudden you have 100,000. So that's why you should be scared of investing.
Yeah. And look, I think part of this is you have to be disciplined, and maybe this is what you're going to get to, but during those periods of volatility, you have to be able to say, okay, I know this isn't forever. History would tell me that if I don't sell today, it'll go up tomorrow.
That could not have fed me better the next point. So right, we talk about those short time frames where those things are scary.
Yeah.
When you zoom out, when you look at, they've been tracking this, right, since 1926 is when they started publicly listing the US stock market. The stock market just looks like a line. It's just a straight line up and to the right. And so you always hear that on people's LinkedIn's, up and to the right. When you really zoom out on the stock market, it is a linear money printing machine that returns 10% before long run inflation assumptions and about 7% after long run inflation assumptions. So when you zoom out, you look at that versus investing in cash, which has lost you a significant amount of money in real terms over that time frame, or even bonds, which have beat inflation by 1 or 2%. It becomes ludicrous not to invest a significant portion of your net worth in stocks. The acronym we like to use is TINA. There is no alternative to beating inflation.
No, I like that.
Over the long run. So just like I talked about, right? Even on a real basis, adjusting for inflation, if you just put your money in the stock market and don't touch it, you'll double roughly every 10 years.
So you mentioned how investing in cash can actually, in real terms, lose you money on a yearly basis. I can understand how that might be complicated for somebody that doesn't understand that concept. Could you just break down what that means? Let's say you had $100 and you kept it in a checking account for 5 years. How could that lose you real money?
Yeah, that's a great question, because your account balance didn't change,
Exactly.
right? So how could I have lost money? It was under my mattress the whole time.
Right.
Really, what you're seeing is a loss of purchasing power.
Yeah.
So picture if there was a 3% tax on your money every year. That's basically what inflation is. So that $100,000 or $100 the first year, you go to the grocery store, you can get a certain basket of groceries, which is actually how they track inflation. It's very fascinating. The next year, that same amount only buys you the previous year's $97 $1,000 worth of groceries. You have to put your Welch's fruit snacks back, which stinks.
Which that sucks.
Terrible, right? So when you think about that, that is really, you're losing your purchasing power. You look at the ability to buy a home. Think about the homes where we grew up, very nice homes, most of them worth, $500,000. All those homes are worth $1 million now because of inflation in the price of homes.
And so if you're not investing your money, be it in stocks or bonds or however you're doing it, you're actually losing money without actually losing dollars.
Correct. You're losing the ability to purchase the lifestyle you want is what's happening.
When we're talking about how somebody would even start with something like this, so if somebody said, hey, Dan, I want to invest in stocks, but I don't even know how to do it. What are some good places to start, whether it's having a financial advisor or even without one, to start investing?
Yeah. So one thing I do want to make very clear, not everyone should hire a financial advisor.
And that's how you know you're a good one, because you are saying that as a financial advisor.
Exactly. We have kind of 3 metrics that we use for onboarding them. We call them the 3 Ps, right? So someone has to be personable, it has to be enjoyable to work with them. It has to be physically possible. They have to have the means to work with us, and it has to be profitable. It has to feed our families and keep the lights on, right? On the flip side, on the client side, right? If I'm thinking about from a client, is the fee I'm going to pay this person, am I going to receive a multiple of that fee as a result of working with them? So what we usually quote, and this is based on research by Vanguard, we typically generate what's called advisor alpha, about 3% in excess of our fee. So if we're charging you 1%, the perceived pre-fee benefit of working with us is about 4% annualized. The whole amount, litany list of line items where that comes from. But if you're just starting out, right, and you're saving $100 every month, $1,000 every month, does it really make sense to have 1% of that paid upfront? Probably not. You should just be focusing on growing your wealth as quickly as possible. Now, fast forward a few years, you're someone that works at a publicly traded company, and you've been receiving half of your compensation in the form of restricted stock units.
Which, frankly, a lot of senior level folks do.
Exactly. You see these guys 5 years out of college, these guys and gals that receive $150,000 a year in stock options from Microsoft or Google. They don't understand they're paying ordinary income when those stock options vest, but then they also owe tax on the back end because those stocks keep continually going up. So that's where we have those conversations about how can we reduce your tax burden? How should we be planning? Are you even withholding the right amount? Because the IRS default is 22%. Your tax rate might be higher than that, right? So lots of things we can talk about. When it makes sense to hire a financial advisor is when clicking a buy button every 2 Fridays of the month is no longer a sufficient financial plan. Your taxes are starting to get too high. You're having other things come into your life. That's when it makes a lot of sense to hire an advisor. And that's where we sleep well at night, knowing we're adding tremendous value to the folks we're working with.
But it's a win-win, right? I mean, they're paying a fee. In theory, they're making a multiple return on that fee. And you guys are providing sound client service and able to make a good living.
Correct. It truly is one of the most rewarding professions, in that when someone calls me because they got a raise or they're changing jobs or they just gave birth to their first child or they're buying a home. Yeah. That literally warms my heart, and it also makes me money, right?
So it warms your heart and your wallet.
Exactly. So it's really a twofold benefit, and to share in the joys of some people who I never would have met outside of the profession is a tremendous feeling.
So this is probably a nice segue, I think, into the next section, which is how you got into this and what you're currently doing as an advisor. So you speak a little bit about the people that you've met. Can you talk a bit about how you develop that network and ultimately become a trusted advisor for, in your case, people that are often older than you?
Yeah, absolutely. So I think for me, and I was labeled this by one of my early mentors, was kind of a student of the game. So doing a ton of research, never having to be asked the same question twice and not knowing the answer. I think those were two of the things. My profession is so many tangible skills, right? Do you know the default withholding rate on RSUs? What's the max for a 401k, right? So I think just reading, right? And sometimes boring, reading the IRS website, right? But that's how it goes. The Secure Act moved back the RMD age. I got to know that now.
Right.
So I think being a student of the game, whatever profession you're in. And I think one of my biggest pieces of advice for leveraging your connections, right? Because everyone's going to tell you to leverage your connections.
Of course.
LinkedIn is a phenomenal tool. If I'm a senior graduating college right now, right, which some of your listeners may be, I can look at alumni of my college who work in the exact field I want and probably at the same company. So why aren't you reaching out to them and having 15-minute chats? What can I do to, set myself up for success in this career path? What can I do to get hired at Google? So I think that's one of the biggest things. I've had so many people reach out, message me and want to sit down with me directly. And I'm always so impressed by a 19-year-old who does that. And I think that goes a long way. So I think leveraging your connections is huge. And then be a student of the game. Admit you don't know everything and say, I'd love to sit down for 15 minutes with you and learn about what you do and what makes you successful.
Right.
Who doesn't want to hear that, right?
Well,
Who
because
doesn't want to
look,
get their ego?
people love to talk about themselves. And that's kind of what we're doing here.
Exactly. I love it.
So on the contrary of that notion that you just brought up is this idea of being able to connect with people and have these awesome conversations. I can imagine that you've also faced a fair bit of rejection, be it cold calling, reaching out for your own financial advising business, or for career advice. Can you talk a bit about how you deal with rejection, both in your profession as well as from mentors that you've tried to kind of bring into your community?
Yeah, absolutely. So I've been very fortunate. I haven't had too many mentors, refuse advice. Obviously, the more successful someone is, the busier they are. So it can be a little bit harder. But again, 15 minutes of someone's time, you can find it. As far as client onboarding goes, right? Obviously, we wish every person we spoke to wanted to sign the dotted line day one, and that has happened a handful of times. And you feel like the best financial advisor and closer ever, right?
It's like the Wolf of Wall Street. Sell me this pen.
Exactly right.
Yeah.
And so what happens on the flip side, right? The vast majority of the time, way more than 50%, and numbers that we don't like to talk about, is people say no. For whatever reason, I think I'm better at doing it myself. I just found out this guy at my church is a financial advisor. I've known him for 20 years. I want to work with him. Whatever the reasons are, they may not even make sense to you, right? In my mind, I'm like, I showed this person the best plan. I would have netted them $100,000 over the rest of their lifetime. Why do they not want to work with me? The human mind is a terrifying place to explore. The biggest reason, usually people don't like change. People have been doing what they've been doing and they don't want to change.
Of course.
So whenever I have a rejection, a particularly hard one, right? We work with a lot of high net worth individuals. There are plenty more out there that I wish I had, do work with. But ultimately, when we think about rejection and dealing with that, my number one thing I come off of those calls thinking now, and this took years to kind of acquire this mentality. What can I learn from this?
So truly, when you get off those calls, you've now developed a mindset to have that as your first thought.
Precisely. That is my first thought. And now if you just view it as an opportunity, it's an opportunity to get better, and look yourself in the mirror and say, it's something I did wrong, right? Even just now, I just gave you 10 excuses why people say no and why they're wrong and I'm right.
Right.
It was me not doing a good job convincing them. I didn't overwhelm them with value and convince them of working with us to be the best idea of their life. That's why they're not sitting at the table with me, working with me. Right?
And what you're looking to do is provide real value. I see a lot of stuff on social media of people that are trying to sell me, let's say, a course or a book. Like what you're trying to do here is fundamentally improves people's lives. That must be rewarding for you.
Correct. Really at the end of the day, it is sales. I do have to convince people to sign on the line and start an account with us. But when you think about it in the frame of, I'm not selling an object or a transactional relationship. I'm selling a lifetime venture together. You are hiring me. That is a word I use so much. Not you need to buy this from me. It's you are hiring me to do this for you. When you think about that, it also actually really helps you become a better closer because you start asking interview questions, right?
Like what? What's an example of one?
So before we're sitting down for the podcast, right? If I wanted to, and I should have done this to make this podcast go more successful, I'd say, picture an hour from now. What could I do or say on this podcast to make you feel like it was the best decision you ever made to have me on?
I see.
When we're going through this process, what can we do on our end to help you make the most educated, informed decision in deciding to work with us and feel really good about that decision?
Right.
The list goes on, but those are all questions you should ask at an interview, right? So circling back to the advice, your employer finishes the interview. You should A, always have questions, and B, what can I say? What can I do? What can I become to make you feel like when we're sitting at my performance review 5 years from now, that hiring me was the best decision you ever made? It's the exact same thing.
Well, because look, for these people, it's an extremely vulnerable moment to entrust somebody with your livelihood, which is your net worth. And it is an especially hard sell given that dynamic.
I'll give you a great example, right? What would you say is more secretive to you, your family members or your money?
My money.
Correct. So if I met you out of the blue, right? We had never spoken before. And I said, what's your mom's name? What's your sister's name? When is your youngest sister's birthday? You probably wouldn't really feel comfortable sharing that with me.
Right.
If you had been talking to me for 10 minutes.
Right.
What's in your bank account right now? What was your credit card bill last month? What's your mortgage payment? That's even more personal.
God. That's probably 10 times harder. Not only is it probably hard to ask those questions, but also for these people, it's really hard to start talking candidly about what they're worth.
And that's why we always start, right? Kind of peeling back the onion. We always start with the philosophical side. What's your relationship with money? What are some of your goals? Because once you put it in the context of I'm here to help you reach your goals, and I can't do that if I don't know what's in your bank account and what your mortgage payment is, right? When you put it in that context, it does open up people a lot more. And it still surprises me, right? Someone that I've never met before and I'm speaking to across the country is now entrusting me to be that silent guardian of their finances, right? But I always sleep well at night because we do a good job, and it's such a qualitative job, and quantitative at the same time, that they know we're doing a good job. And so I feel really good about it.
That's amazing, man. I know that people have anxiety about money, and I know that because I have anxiety about money. Are there ever times where you feel like a part-time advisor and kind of a part-time confidant or therapist? Is there a lot of quelling of anxiety that you do in your role?
You just opened up a can of worms, because there are times where I've almost had to say, I'm not your therapist. I'm not your marriage counselor. This is a decision you guys need to have separate from me. I can give you what I've seen make other couples successful, right? Maybe some couples do this. I don't typically see couples being very successful when they completely separate their finances and they don't view everything as one unit.
Oh, yeah.
Think about compounding interest, two different sums compounding in a different way, differently, right? But I have to be that kind of barrier between them sometimes, right? And those can be very challenging conversations. Those are also some of the most rewarding, right? And those are tough conversations. Your estate planning, right? Someone that has $10-15 million that spends $100K a year is going to die with $50 million.
Yes.
At that point, it almost becomes, what things do you care about? What causes, right? Your kids can each have $5 million.
Like they're good.
No problem. What causes do you care about? Now it's not even just leaving an impact on your legacy. It's or on your family. It's leaving your legacy on the world. And I think that's a really powerful conversation that we have as well with obviously some of our more financially fortunate folks that we work with.
Yeah. And one thing that we haven't touched on yet, but that I think is very interesting is most of your clients are actually a little older than you. Mm-hmm. What's it like to be the voice of reason and the trusted confidant to people that are 30, 40, 50, 60 even? Did it take a while for you to kind of get over that hump and kind of have the trust in yourself that you really know what you're doing?
Yeah. I think when I started, right, pretty green off my Series 7, it only took a few calls to realize 99% of the population I'm already more informed that. And then over the next 5 years, I've spent my time cultivating a knowledge that makes me more qualified than 99.99.
And I feel like to anybody listening right now that is saying, hey, I don't know what any of this stuff is, that's okay. Most people don't. And that's what people like Dan are here to do. And even if you're not ready to hire a financial advisor just yet, you can find information everywhere. YouTube is important. You can read a bunch of books. Are there any books that you would recommend for somebody that's just curious and starting to think about investing?
Yeah, that's a great one. So that chart I mentioned earlier where stocks just look like a line.
Exactly.
That can be found in Jeremy Siegel's book, Stocks for the Long Run, where he just makes the case that Tina, right? There's no alternative. So that's a phenomenal resource. He talks about which asset classes have performed the best over a 100-year time frame, not last week, which I think is amazing, right? Everyone loves the large cap growthy tech stocks, right?
I definitely do.
I am overweight them as well, but something I've really started to do, which is hard when they are not doing as well, is the highest historically, the top quintile of dividend paying stocks have performed the best, and small cap has outperformed large cap.
And for those that don't know, can you just say, what is a dividend stock?
Yeah, so there are kind of two major styles of equity investing, right? Buying stocks, owning part of a company. A dividend, right, is when the company pays part of its profits back to you, just as a reward for being a shareholder.
In cash.
Correct, in cash. Now, there's different tax treatment of that, which is time for another episode. But a growth stock, typically they're holding on to more of the earnings of the company. They're not paying it back to you. They're investing it in R&D. Those companies are typically more highly levered. They're getting a lot of loans from banks to quickly grow the company. So you pay what's called a higher earnings multiple, PE value, for the concept of future earnings. And then with a dividend stock, the earnings are already here and they're already paying them back to you. So you pay a lower multiple of earnings. Both types have a solid place in the portfolio, and different economic cycles dictate whether you should be overweight one or the other, but you should have both at all times. Same thing with small cap, right? No need to explain that one. Small stocks versus big stocks. Small stocks literally physically have more room to grow than big stocks. So historically, right, not every day. They're more volatile, but they've grown a little bit faster.
And you have talked about on this episode having different types of investments. I could see how somebody would hear the word diversification thrown around a lot and be like, what does that even mean? Can you just break it down at a high level? What does it mean to be diversified in your investments?
Yeah, so diversification can mean a lot of things. Really, it just means different investments that perform differently from each other. So thinking about, at least you need about 40 different kind of uncorrelated positions in the portfolio to be truly diversified. Luckily now you can easily accomplish that through a total market ETF where you own the Wilshire 5000, which is
5,000 companies.
Poorly named because it's about 3,050.
Oh, geez.
But that's a great way to instantly add diversification. And the important thing is no one stock is going to be the best stock of all time for all time, right? Less than 0.5% of companies make it 100 years. So Apple, Nvidia, they will all crumble and die before our eyes in our lifetimes, very likely.
Statistically speaking. And so it's very important to not just own Apple and Nvidia, but also own the Exxon Mobils of the world, and also own that small cap energy stock too, right? Own that healthcare provider that's revolutionizing the industry. This is advice that I need to hear, because if you saw my portfolio, you would vomit. But it's easy, I think, for us to get caught up in like, hey, I want to buy this Bitcoin miner because it went up 10% yesterday, so it'll go up 10% today. Clearly, what you're saying here is that's not really true.
It all harkens back to get rich slowly, right? When you zoom out, even on these total market ETFs, right? They haven't done as well as Nvidia or Meta this year, but 10% plus year over year, every year for your life. When you obviously take that into account over the long run, that's pretty phenomenal. So don't be afraid to get rich slowly. Don't be afraid to do the right things. It's not as cool as posting that you tripled the market's return in your Instagram story, right?
And if you try to do that, you'll probably end up posting that you don't have a house and you're out of money. And
the people that beat the stock market are very famous, right? Because there's so few of them. Right? Warren Buffett, Peter Lynch ran the Magellan Fund, which was a phenomenal fund at Fidelity, never had a down year in 20 plus years. They are lifetime famous investors, right? And Warren Buffett hasn't even beat the market recently, right? So don't think you're him. You know what I mean? Don't
you are not him.
You are not him, dude. Trust me, you're not that guy.
So look, I think you're clearly so knowledgeable about this. You're so disciplined, and I've known you for a long time. You've always been this way. But one thing that was really important to your life before financial advising was wrestling. Now, wrestling is an interesting sport. I know this because I wrestled as well, and you were actually the one that got me into it. But can you talk a little bit about the life lessons you've learned from wrestling and some things that you carry through with you, especially in your career, that you learned on the mat?
Yeah, I think the number one thing in wrestling that you learn, and you've said this quote, and I love it, no one is coming to save you.
Yeah.
You are on that mat and it's just you and all the hours you put in the background. You really are who you are when nobody's watching, right? And that's those training hours. Now everyone's watching and we're really going to find out who you are. And so that's really what wrestling brings to the table. No one's standing in my office watching me send LinkedIn messages to my connections and reach out to new prospects and run a spectacular meeting with a client, right? I have to be doing those things.
Yeah.
Otherwise I won't feed my family.
It's very unique because in most other sports in a team setting, it's you and 10 other people or you and 12 other people. When you go out on the mat to wrestle, it's one-on-one.
Correct. And that's what I also love about it is that self-determination, that self-agency, much like my career where I've built my own thing. You build your own style of wrestling, you put the work in, and to your point, right, on the flip side of no one's coming to save you, the positive thing is no one's holding you back. So on a football team, you're a great wide receiver. If the quarterback throws a pass 5 yards short, there is nothing you could have done. You ran that same route 1,000 times in practice. You've been working on your hand skills, right? You have the new cutter gloves. You were going to catch it, right? No one can help them there, right? In wrestling, when you put in that work, if you outwork your opponent 9 times out of 10, you're going to win. And so I think that's a phenomenal feeling to have.
Yeah, that's tremendous. There's another element of wrestling that I think is interesting just to touch on, and it's the weight aspect of wrestling. Now, this is a very understated element of the sport. Not a lot of people know about it, but you had to cut weight a lot of times growing up. What did cutting weight teach you about discipline and about controlling some of your impulses?
Yeah, I think cutting weight, much like the budgeting element of your finances, right?
Yeah.
It's, do I need this? Do I need this fruit snack? Do I need this cheeseburger? And it does teach that self-discipline. And what you'll find is when you're really hungry, that can take you to some dark places and you really have to look at the man in the mirror and decide who you want to be.
And that sounds crazy, but it's so, because I've experienced it before. Like you haven't eaten all day, you come home, you just want to have that, I don't know, bag of chips, and you got to be like, I'm not doing this.
It is so challenging. You know, you were there for the worst weight cutting years. When I got in college, I got a little bigger, easier to cut weight as a big guy. Sometimes I'd bump up for the team, whatever. You know, when I was cutting from 150 pounds to 126 and I'm 6 feet tall, right?
And you're doing that in like a week, 2 weeks.
I'm stripping muscle and fat and all the water out of my body, right? That really teaches you a lot about who you are as a person. And one of my other favorite quotes, once you've wrestled, everything else in life is easy, right? I woke up not feeling my best today. I slept through my alarm. I love going to the gym and I missed the gym, right?
Yeah.
It sucks. Yeah. Guess what? I was still at my desk at 9 a.m. I had a phenomenal day and now I'm here, sharing some time with an incredible friend, right? So everything is truly easy once you've done those things, once you've faced those challenges. And I think just the time management, the organization, the discipline, the ability to take accountability for your actions, right?
Because there's nobody to blame.
There's nobody to blame. There are countless situations where I personally lost a dual meet for our team, both in high school and in college. Even if I won the match, I didn't get the pin. I was winning a match and got pinned once against Scranton. It still haunts me to this day. I was literally on top of the kid and let him freaking pin me.
Yeah.
So those things really force you to take accountability. And when you do that, that also takes you a long way in your career. I messed up. I'm gonna be the change about it, because no one wants to have that, whoever smelt it dealt it guy, type of energy where they're not taking accountability for their actions.
I think that's a really important thing to learn, not only in wrestling, not only in your career, but just generally in life. Like, can you talk a little bit about why it's so important to have accountability and how that's helped you, just generally across your career?
Yeah, I think accountability is what helps organizations and teams alike run really effectively.
Yeah.
Because it helps you identify problems. And one of my favorite things to do when I look inward is identify a problem I have with myself and how can I work on fixing it? Because when you do that, that's a really rewarding feeling. And for all intents and purposes, it's just a better way of living life, right? If you've, grown up and you didn't brush your teeth twice a day and your significant other says, Mike, your breath stinks, right? That's a good area where you could not be like, oh, well, it was because I ate a sandwich for lunch. No, it's because you didn't brush your dang teeth, right?
Totally.
Look in the mirror, take accountability, and brush your teeth. And now you're a better person. You're going to have a better smile for longer, right?
And it can be a fun thing. It doesn't have to be this grueling thing. You can, hey, I can work on, looking a little cleaner every day. I can shave more often. I can hit the gym 3 times a week instead of 2. I don't think it has to be this, miserable experience for you to take accountability.
No, and isn't it fun when you kind of dig into yourself a little bit and find something to improve? Like,
absolutely.
I think you have incredible style, right? Rewind 10 years ago, you were probably wearing sweatpants
every day. I know. I'll do you one worse. I was wearing salmon, Vineyard Vines, khakis to school with slippers. So I'd say I've upgraded since then.
Wouldn't you say that that's rewarding and you're a better person now because of it?
Absolutely. Absolutely. And it's a continuous process, right? I think one area that sometimes I get trapped is I find maybe too many flaws in myself. I'm always looking for an issue, but there's a difference between consistently finding flaws and actually identifying areas where you can be a little bit better.
What I would say whenever I feel down about any element of myself, whether it be, physical because I'm so into the gym or knowledge-based, whatever it might be, if you Google your problem, you'll find there's thousands of people like that. Right.
Just put Reddit after it.
Yeah, exactly. Right. And when you dig a little deeper and you look at kind of the averages of society, right? You and I sitting at this table are both so above average in so many ways.
True.
Very successful, loving families, amazing significant others, right?
You're taller than me. You're stronger than me. You're more handsome than me. But
you're faster and you're a better athlete, right? So there's always some way to find it, right? And I find myself doing that a lot because I do get really self-conscious because I am strong, right? And that's great.
Yeah.
But then I see these guys that come up on Instagram reels and it's like there's a 16-year-old, benching your max for reps.
Lifting a condominium complex.
Exactly, right? But then you Google what's the average bench and it's 225 and I can do a lot more than that. So I'm like, okay, I feel good again.
Exactly. Right.
So it's really, think about, where you come from and you don't have to get ridiculous with it, right? You don't have to look at really underprivileged people. But when you look at even successful people in New York, right? We're both doing really well for ourselves. You look at those means and those medians and we're far above that, right? That doesn't mean you shouldn't want to continue to climb, but, be grateful for what you have too.
It's a fine line you have to walk between taking accountability and being better, and also being grateful for what you have and knowing how good you really are. Mm-hmm. For me, and I've made a video on this, I think comparison is the thief of joy. Mm-hmm. I look around and I'm grateful to be in a very successful group of friends. You're in that network. And so when I compare myself to others, I'm never going to be good enough. But if I compare myself to where I was last week, maybe I can be good enough. And I think that's something I'm working on, but is a really important skill that if you can learn it, you'll live such a happier life.
Absolutely. And you know what? That sentiment you're experiencing is actually a good thing.
Yeah.
Because, right, there's that, I don't fully subscribe to it, but there's that psychological concept of you are the sum that's everything that happened to you, right? You are the sum of the group of people you hang out with.
Yeah.
If you're hanging out with people who are more successful than you, do you think that's going to make you want to be less successful? Probably not.
Only better.
So when you're in with that right crowd, right? And I talked about having some tremendous mentors, at my current firm and prior, it forces you to really level up, forces you to push yourself in a comfortable but also kind of thrilling way, because you put yourself outside of the your comfort level. That's something that wrestling always will do. You push yourself to where you're uncomfortable. That's where the most growth happens.
Absolutely. And for those that are listening, whether you're 16 or 30 or 65, like there is no age where you have to start doing this stuff. You can do it at any age. Me personally, I'm biased. I think your mid to late 20s is a great time to start to figure out what makes you tick and what you like and what you could be better at. But like, who's to say that a 15-year-old couldn't do that? Who's to say that a 75-year-old couldn't do that? I think that's what's so great about this stuff.
It's never too late to find yourself. You mentioned you're always, looking at into different hobbies. On some of your last episodes, you talked about 2 amazing hobbies that you don't have as much, but you already seemed interested and fascinated by them, right? And those guys shared amazing stories of how they got into those hobbies.
Right.
And so it's never too late to reinvent yourself. There's so many amazing things you can do out there with so many amazing people that there's really no reason to think it's too late for that, right?
Yeah, no, absolutely. I think one area that maybe we can close on is, look, man, you're an extremely successful person in almost every single regard.
I appreciate
You've
that.
got a wonderful fiance. You've got a tremendous career. Aesthetically, you're very pleasing. But if you would kind of summarize the things that helped you to succeed, not just in your career, but in life, what are the few tips you would give somebody that might be looking to level up, let's say?
Yeah. I think that's a great question. I think number one is your supporting cast, right? We just talked about this.
Your group of friends.
Be with people who are more financially successful with you. Lift weights with people that are stronger with you. Run with people that are faster than you.
Yeah.
That will always push you. And a lot of times you'll find yourself catching up to those people. And now that's a dangerously good feeling.
Yeah.
So I think that's one of the really big things. And then I think the other thing is just take pride in your life. Take pride in what you do for a living. I don't care if you're working at McDonald's. Be the best McDonald's cash register person that has ever happened.
I love that.
You're going to get promoted. You could find yourself in McDonald's corporate one day, right? Even if it's just your first job. Take pride in what you do. When you do that, and up until NIL, you saw this with college football games were so exciting and so different atmospherically from NFL because they were doing it for school pride. I go to Bama. I love being an Alabama football player. So take pride in everything you do, whether it's, again, working at McDonald's or if you're the CEO of Goldman Sachs, take pride in what you do.
Because what's the alternative, right? That's less fun. To not try your hardest, to not try and succeed. And I think another important thing is identifying what you actually like. So whether you work at McDonald's or not, do the best you can in that job. But if you think you like something else, consider putting some thought into what actually makes you tick. You clearly, put some thought into, hey, I like the markets. I like building relationships. I want to be a financial advisor. I think that's another really important thing to note is if you don't ever sit down and say, what do I actually want to do? You risk building a life for yourself that isn't fully yours.
Could not have articulated that better myself. You never want to look in the mirror and say, where am I? What am I doing? Why have I done this?
But if you do, it's never too late.
I love that. Yeah.
Right? It's like, if you do, okay, great. Go start today. Sit on your bed for 5 minutes and think to yourself, what do I like to do other than scrolling on TikTok?
And whatever you do, just take a lot of pride in it.
Just take a lot of pride in it, man. Well, look, this has been a complete pleasure and honor to have you on the podcast. Thanks for coming on, man. It's been a privilege, and I look forward to maybe a round 2.
Awesome. Thank you so much.
Thanks, brother.